COVID tax depreciation incentives, and my favorite fixed asset register software. Stick around till the end to find out. Tax Nuggets has bought about $5,000 worth of filming and editing equipment, and some of these are second-hand, so I need to see if I'm eligible for any of the incentives, which allows me to immediately deduct the entire cost of the asset rather than depreciating it over the life of the asset, which could be over 5 or 10 years. First of all, I must be carrying on a business, which means if I'm merely renting out my property, I would not be eligible. But Tax Nuggets is definitely carrying on a business, so we're all good. Next, I have to check that these assets are depreciating assets, because if they are capital works, which are buildings or anything that's permanently attached to a building, then that's not eligible. So all these assets are depreciating assets, and I'm all good. Next, did I acquire the asset after 6th of October 2020, and did I start using them before 30 June 2022? The government has announced that it will be extending the due date to 30 June 2023, but it has not been legislated yet. So I acquired and immediately started to use the equipment around April 2021. So I go down the route to the next question. But if you've acquired your asset before 6th of October 2020, you go down a different route, which is subject to another video. Next question, is my turnover under 5 billion? Massive yes. Next question, is the asset in Australia or will it principally be used in Australia? Yes. Next, is my turnover under 50 million? Yes. And that's it. No more questions or conditions to meet. I can immediately deduct all these assets. Yay! But if your business is more than 50 million in turnover, you have to meet a few more conditions, because the government will not give you the incentive if you were already committed to buying the asset anyway, even before they announced it in the budget on October 2020. Sorry, no second-hand assets, but you could still potentially be eligible for full write-off if the asset costs under 30,000 or under 150,000, depending on when you bought these assets. You may also be eligible for accelerated depreciation, which is under a separate bunch of rules. So we've worked out Tax Nuggets is eligible for immediate deduction for tax purposes, but should I still be maintaining an asset register for accounting purposes? Because what if I need to get a bank loan and the banks will look at my balance sheet and say, hey, all your assets are worthless? So I'm going to share with you this amazing software that I found called AssetAccountant. It basically allows you to maintain 2 separate asset registers, one for tax, one for accounting, simultaneously. Like with just one click of a button, you can get immediate write-off for tax purposes and then switch to your accounting asset register and still be able to maintain a healthy balance sheet. And you can even search the effective life of an asset from the ATO's tax ruling from within the software, and it automatically populates it for you. It also integrates with Xero, which I use, but also a whole heap of other accounting systems. So it's got all the bells and whistles. You can post journal entries, revalue, impair assets, and then for tax purposes, you can transfer assets into a pool as well. And the best thing about it is that it is free for the first 25 assets, including integration. And it's usually $9 a month for up to 500 assets, which is really cheap. But I have done a deal with these folks, and Tax Nugget subscribers will get this for free for the first 3 months if you sign up by 31 August 2021. So, Tax Nuggeteers, look out for my email, which will contain a secret code to get you into the guest list. You're welcome.